Hello and welcome to another update video about FETCH.AI. It is a pretty unreliable chart when we talk about the microstructure. So the micro is a bit of a mess. However, I shared with you yesterday my best perspective of the micro wave counts here on the 1 hour chart, on the FET chart. We are dealing with a correction and the wave counts don't need to change. So in the end, the market is respecting very well the parameters. Someone complained in the comments yesterday that nothing changed. Kind of. Well, that's actually a good thing, because if nothing changes, then the roadmap is being followed, okay? And the wave counts are being respected. The roadmap is relevant, and that's what we are tracking here on the FET chart at the moment. First of all, the support levels are unchanged. We have a series of Fibonacci levels that can guide the price and that can offer some support. The highest one has already offered some support here, the 38.2 retracement level of this move to the upside. That provided already some initial support. The market rallied, and you can see that we have something that you could call a descending broadening wedge pattern here on the chart. The price is moving within this price channel, within this wedge pattern, and the correction to the downside is still unfolding. So the price is moving in corrective structures to the downside. That's pretty good. I know it is boring, but I'd rather have a structure like this, where we can actually spend some time counting the waves to get a good understanding of when this correction might be complete, and have something like this instead of an impulsive move to the downside. Because if we get an impulse down, basically that would be a mirror image of what we saw here to the upside. You don't really want to see that down. Yeah, that would create a lot of panic. This here looks actually, I mean, you could even call that a somewhat messy bull flag. But based on this wave count here that we have on the chart, we can add some support levels obviously to the chart. You know, in addition to the yellow box, I already added the orange one a few weeks ago, and it's between $2.07 and $1.28. Well, that means we have two scenarios here on the chart. We have in the yellow chart, in the yellow count, a more aggressive direct 1-2 setup. In the yellow count, we should see a third wave rally to the upside at some point to $4.80 plus. And in this scenario, we should be much more aggressively bullish and even probably eventually move to $10 to $12. However, this scenario, in my opinion, needs to prove itself. It's already moved a lot, obviously, this price, okay? And I'm rather inclined to believe the white count is unfolding, which also allows for more upside into the $5 plus region, but not as aggressively. And after the next high, we are likely going to see a deeper wave 4 pullback before it continues higher, its upward trajectory to, yeah, I mean, $8 plus, yeah. It's just less aggressively bullish. We'll see. I mean, they're both bullish, both scenarios. And also, in both scenarios, the correction is not yet complete. I mean, technically, it could be complete. You know, in the yellow count, we've reached the support zone. It could turn around at any point. However, what I want to see is actually a 5-wave pattern to the upside. I don't see a 5-wave pattern to the upside from the recent lows. If I go to the 1 hour chart, so this is a 3-wave rally, A, B, C in a B wave, and it only formed lower lows and lower highs. So unless we see a sustained break above the descending trend line followed by a break above the X wave high there at $3.02, I will continue to assume that we are still in this correction and might test the yellow support zone again, possibly even the orange one. And as you can see, there's a bit of an overlap at the $2.07 level. So if we form another low, $2.07 and $1.86 could be the next support levels. And this would most likely happen in a WXY structure, and the Y wave is likely unfolding right now. So W, X, Y, and the Y wave would be an A, B, C pattern, and this C wave is likely unfolding right now. And then we can add the Fibonacci extensions, because if we have the length of the A wave and the length of the B wave, I don't think we had that yesterday. No, we had the top of the B wave. Then we can calculate the C wave target, and that's actually at $2.03. So can you see that there is quite a lot of confluence around the $2.06, $2.07, $2.03 mark? So this range between $2.03 and $2.07 could offer some additional support for wave C and might actually be where wave C completes. I would definitely be watching that area if the price actually comes down. I mean, as I said, technically speaking, the low could be in, but then it's not very obvious because we've seen only 3 waves up. So for now, I assume we are going down lower. What you can never rule out, of course, is that this correction is extending a little higher. I mean, it's possible that it's doing this, like all of this as an A wave, larger B, then we come down and C. I give you my, my best view of the microstructure, but these obviously tend to change very often in corrections. What's more important than the microstructure are the support levels, and we use the microstructure to figure out if a first impulse to the upside has already started to unfold, and at the moment that's just not the case. So not much change here, just a quick reminder of the relevant levels, breakout points, and the support levels, and so on. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.